Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Tommy O'Brien, Darrell Martin. My dad Tom's out today, so we will be on our own. What's going on, Darrell?
How's it going, man?
It's going good on a Friday. Excited for the weekend. We got a lot of rain in Clearwater this weekend, but excited for it either way. How about yourself?
Oh, it can be nice and burning hot this weekend here in Texas.
Nice. That's Texas in the summer, right? That's like it's rainy in Florida in the summer. Same deal, exactly.
Yeah, we got a free month. We got like a pass on June because we had all the rain that was coming in.
Okay.
But July, yeah, man, just cooking us out here.
Yeah.
But yeah, I got 2 rodeos. Got one tonight. Got another one tomorrow.
Nice.
So Felicity,
is that your daughter? Yeah, in both of those?
Yeah. She
Nice.
Just keeps going, man. It's keeping up.
And how old is she again?
She's 8 years old.
Okay, cool. Yeah,
So,
I remember you got to love, sports activities. When I was young, I was playing hockey and getting ice time. It was always literally waking up at like 5 in the morning on Saturday or something to play a 6:30 in the morning game. But it was awesome. When you're that young, you love it no matter what.
Yeah, well, the nice thing, most of these, except for, when we're out of town or whatever, tonight's is like at 7 o'clock.
Yeah, that's awesome. As a kid, you always thought you were in like prime time playing hockey. You never could get ice time at night because that's when the real people played.
And then tomorrow it's at 6 o'clock. So, basically, they just turn on the arena lights and we go out.
Nice, man. Nice.
And so it's a beautiful thing. Get to get out there and just relax and chill out and have some fun.
So what's going on with this flat market, right? It's like, Amazon is up 20% and the NASDAQ can't even do anything, and it's kind of a flat market.
Yeah, Nadex is sort of ranging right now.
Yeah.
It's not doing a whole lot at all. So I've been doing the same thing. It's been scanning right now this morning. I'm like,
okay.
Not a lot going on yet, but we had some movement earlier in the morning, but
yeah, no, there has, and especially from overnight to there's been movement.
Well, at 6 a.m. it moved down pretty nice, but down to about a little over 0.7 of deviation right there. But then it bounced back up, and now we're just sort of ranging.
Okay.
At the moment, so we're just gonna take some pretty strong volume, I think, to bust up and get through. Back on up into the settlement range. I think it's going to be a little harder for it to do that today.
Yeah, I'm surprised with Amazon, which I love Amazon. I have Prime. I don't even watch their content that much, but I just order so much stuff with the shipping alone. It's more than valuable.
I have the Prime on my TV. I have
Netflix, and I will end up doing it. I know they have a bunch of great original content. They have John Goodman has a show in there somewhere that I want to check out.
Well, a lot of times they'll have a lot of times they have movies or TV shows, that Netflix doesn't have.
Yeah, that's what I
have it on my. I have a Xbox 360 or whatever, and I can hop on, or Xbox One, I guess, whatever it is now. Anyway, so I'll hop on there, and we actually watched some shows on it last night.
Nice, yeah. But, I fully believe in it, but it was awesome that they actually what I always tell people that they don't believe is like they don't make any money. They just use everything to grow, and if somebody really just doesn't follow it, they can't believe that Amazon just like doesn't make billions and billions of dollars in profit because they're just growing it. But of course, they have a profit yesterday, which is pretty cool.
Yeah, because they have never really reported much.
They really haven't, not to any degree that even matters, considering their valuation. It's
what was now? I didn't get to read the full earnings report on that. What
I should have known it better before I started brought it up. But it was something like the earnings. They were supposed to lose like 15 cents, and they made 15 cents.
Oh wow!
Yeah, and they beat by total revenue, I think, by $1 billion. It was 22.3 was expected. They came in at like 23.4. So something like that, but it was really the fact that they, weren't even supposed to turn a profit, and they turned a big profit. They turned, a considerable profit at least.
Well, I know they just launched a service here. I was really upset. It's not in Fort Worth yet, but it's in Dallas.
Okay.
It's basically like, they're side by side, but they're 30 miles apart. But anyway, so Dallas now they have the instant delivery because I hopped on the app and I was gonna use it.
Yep.
And you can hop on now. You can order groceries.
It's so cool, man. It really is.
It's there within like an hour to 2 hours max. And I think you can order anything you want, and it's instantly delivered to your house in an hour.
And that's only going to get quicker because the competition is only going to drive more instant deliveries, and there's really no reason in the shared economy, Uber style, that can't happen. And they just had that Prime Day last week. Was it this week or last week?
I saw the advertisement on that, and I forgot about it.
So I pulled it up, and I was checking out some deals, and I bought a couple things. I did. I bought a spreader for my lawn that I needed to be able to, just put a spreading bug be gone or fertilizer, anything for your decent-sized lawn. And then, it's like $29. Great deal, I thought, and so
totally
it's stuff, and I've already used it, which is great. So it's like, but it's amazing. I was talking to one of my friends last night. They actually do this deal where I'm not buying stuff that I don't need. I'm buying stuff that I need that I just kind of like didn't know I needed, or maybe it just wasn't in front of me. So
they put it right out there. They're good at that. But I'm excited about the instant delivery because there's so many. I gotta go buy
and so
this
they
or buy
had some
that,
instant delivery on those days, and that's what and that was the first time I really saw it getting pushed. So I think what they were doing is they were trying to use those products, undercut them on price, and then anytime you pulled it up, you go, oh my God, this is prime delivery, and it's delivered today for free, and so it's kind of pushing that as a marketing play in the same deal.
Yeah, I love the free delivery. Yeah,
it's so cool. It is. When I just done a renovation, I was ordering tubs, I was ordering sinks, I was ordering, all free delivery. You're talking about like huge crates you had in free delivery, just because you're prime, and people, and it was as cheap as you get it in Home Depot or Lowe's.
So that's, and then you don't have to go get it and everything else.
That's what you're saving your own time. That's what I was going over. I spend zero time if I want something. I just literally pull it up. I know it's going to be the cheapest, and then I don't know if. So this is what I do. Have you ever heard of the site Camel?
Camel. No,
Yeah.
I've not heard of that.
So I know it sounds. You're not going to forget it because they chose a catchy name. So what it is you enter any URL or product that's available on Amazon to that site, and they'll instantly give you the entire price history of that product on Amazon for as long as it almost dates. So you can pull up a product and you can be like, where is this along the Amazon pricing model? Is this like on the low end or the high end? And you can instantly see that it's never been cheaper, or that it's at its highest value in like 6 months and they'll probably bring it back down. So if you combine those two things, you're always getting a good deal, no matter what. You can see it's a pretty cool site, and not a lot of people know about it.
So you can see if that sell is really a sell or a markup sell.
That's right? And so if you can see the entire pricing structure of that product on Amazon for like the last year, then you're just going to be a completely aware consumer and know what you're paying for it, which is pretty cool.
Okay.
Yeah.
Sweet.
There you go. Didn't even plan, but. So you have nothing on yet. I know I have nothing on yet.
Nasdaq's moving on back down. It's actually hitting the 0.7 deviation level. It's almost to its low of this morning on the open.
Okay.
So if it can bust through, really we're looking for a breakthrough 4,600. Okay.
Okay. We're at 4,603 right now.
4,600, which it's working on. Then I think we're gonna move on down, and it's not gonna be massive. We're looking at 46. 89, about 11 points.
45.89.
Or 45.89. Yeah. And it's got some new glasses.
Yeah, that's right. That's right as you come into the low from yesterday's close.
Yep, and it's also a one deviation move. It's also the low of a volume profile.
So when you say one standard deviation move, when is that calculated from? The open or like where?
The applied deviation move, basically, it's like a standard, but it's using implied volatility. I calculate that at 8:30.
8:30. Okay.
Because what I do is I wait for the options to actually open up and get some trading on them, so we have an accurate IV number. And but it's measured from the settlement of the previous day. So whatever time settlement is, so at 4:50, so I calculated at 8:30. Okay, but I use the IV from 8:30, but I calculate a one deviation move from settlement. So in this case, 4:15 on Nasdaq.
Okay. I'm just looking. Okay. That's it. I just wanted to see where that was. Yeah, and by that point, the Nasdaq had already spiked up basically to almost their highs.
Yeah.
Okay. Cool. Yeah.
So it basically just, but I carry it forward to 8:30 every day. So it's from 8:30 to 8:30.
Okay.
So I'll use that well throughout that, and see how it hit that right there, and now it's bouncing off of that 4,600 level.
Yeah.
So that's what it's going to have to bust through. We're getting really just flat volume. The volume really is not fluctuated at all. Since really that last move down. So if the volume can pick up and bust through 4,600, then we got not a huge move.
Yeah.
But we have a move that we can make a little bit off of.
And so you'd be looking for those 10 points maybe to 45.89.
Exactly.
Yeah.
Yep.
Good.
So.
And
if
what
we're
about
gonna do that? Then we got to find the right contract.
Now,
so,
when you're trading, are you? My dad and I love the Nasdaq ones just really because of volatility and.
Well, now that they changed them, I've literally been on them for 2 years about changing the point value.
Yeah.
And once they changed them down to 0.1, the Nasdaq spreads became worth trading.
They really, they're the most exciting product on there, I think, right now.
And I talked to them. The next one they're working on now, they're working on silver, copper, and a couple of the other ones like DAX and FTSE and all that stuff. So if we can get those moved down, then those are going to be some great products. So now we're hitting on it a little bit.
I'm watching it, I know.
Volume. So
those are a couple big bars. I mean, you're down 17. Here we go. You're down 17 points in the last 10 minutes in the NASDAQ 100.
So just trying to, read it and lay it out. And one thing you want to do.
So how are you gonna choose to profit on maybe that move over the next 10 points? What are you trying to trade?
I'd go in and I like to trade the spreads, as you know.
Yeah.
And so I'm gonna go in there. I'm gonna choose my live account. Let's see here. I'll pull up.
I mean, there's one spread right now that's for the daily 40-point spreads that's right in the middle, basically, from 45.80 to 46.20. Would you do a trade where you're coming in right at the middle of that spread, or are you trying to look for premium on either side?
I love premium.
I know you do.
The more premium I can get, the better. At the same time, I like to also have a little room to make some money. So, I mean, the easiest one, because we're only going for 8 points, and I really want to be out of this trade when it hits that, because I don't think it's going to go further. So I'm more likely to check out this 45.80 to 46.20 contract.
Yeah. That's what I'm looking at right now. I may put on a contract or two right now as we talk about it. That same right in the middle.
Yeah, that's what I'm doing.
I mean, it's just going to move. That's a straight futures play like we talk about. It's just going to move exactly with it.
Exactly.
Yeah. All right. It's Darrell Martin, Tommy O'Brien. We'll come back. We'll check out the NASDAQ. We get a flat market on a Friday. Come on back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Tommy O'Brien, Darrell Martin. So did you get in that trade, Darrell?
I am in that trade right now. It's heading south. I've got my finger on the button. I'm ready to hop out. I'm just watching it right now.
That's what I was going to ask you. You know, I just wasn't quick enough. It was a great, as it was trading to get into it is what happened. As I was pulling it up and finding the contract, and you really just got to be ready, especially if you're making a trade in this fast market, 4, 5, or 10 points to make sure you're getting in before that move. Or as it happens, you know, as you want it to happen, as you see the acceleration across that point. By the time I pulled it up, it was 2 or 3 points past already, and it was, you know.
Yeah. So I mean, it moved on down. It's coming on down there. I'm really like, should I take it? I'm waiting for it to come on down. I got a couple more points left. I'm not sure if I'm going to be disciplined enough to wait for it, but I'm watching.
Now, what is interesting, just to go over exactly how, and this is how, you know, they can come over to TFNN, they can click on the Nadex button, they can go over to Nadex, they can open a $25,000 play money account, really get used to how these things move. But you see, so we got in right, you got into the market right at the middle of that spread, basically, pretty close to it. Now,
yeah, by the way, I'm taking profit right now. I just don't know how much further it's going to go. So I'm going to grab my $300 and call it a morning.
That's what, so, and is that 3 points that you got out of the contract?
Yeah, I got 3 points out of it, so, you know, well, a little bit, yeah.
Now, what's nice to look at is that, you know, you're basically covering yourself on the other side. Now, you're not getting point for point, though, in a 40-point spread when it makes a big 10-point move like that, because there's still going to be premium in there. And just going, so right now it's at 45.93.3, but the contract's only at 45.96, and that's because it's closer to the 45.80 lower edge of that, right?
Exactly, yeah. So, and one thing, you know, I tell people when you're trading these contracts, I mean, they are options. So you really, it's sort of funny because like in the option world, you don't see people trading like Apple and looking at like the call option contract. Okay. And looking at the chart of the call option contract, right?
Right.
They're looking at Apple.
Right.
And then they're looking at the call and they're looking at the price and they're deciding what they're going to do. Okay. Whereas, you know, on Nadex, people go in and they try to look at that price of the option. They get all into it, and I'm like, you're day trading. You got to trade off the chart.
Yeah.
So it came down. It hit right in my zone, my profit zone right there. You know, I got like about a point or so above and below the one deviation level. I got, you know, low volume area. I mean, or you know, from the volume profile. Basically ice right there. You just, like I said, low a days, all that stuff we're putting together.
And you got it in like 4 minutes, 5 minutes too.
Yeah,
which is worth.
I mean, we're not talking like I spent a lot of time making a few $100.
Yeah, when it's that quick, it really is. When you hit it that quick.
And you know, I don't worry about like, well, is my spread at the price I want the market to go down to? You can lose a lot of money waiting on that spread to get on down there.
Yeah.
And so I try to not let that be my, you know,
I think that goes
factor.
well with what you say about taking 80% of maybe your hopeful profits or your ideal target, you know, maximum profit, shooting for that 80% barrier, because that helps make up for that same deal and that last 20% of hope where you're hoping it's the last, you get every penny.
Yeah, I mean, let's look at some timestamps here. I mean, I got in the trades at 10:19.
Okay.
And actually, I had it set the default to 1, so I had to go over and change it to 10.
Yep.
because I wanted to get at least 10. I was actually going to try to do 20 contracts, but by the time it was there, I was like, I'm not going to add in at this point. I'm already lower than I want to be.
Yep.
And I mean, you see my first one I got in there, 45.99, 0.9, 45.98, and then I got in like 10 at 45.97. So it's already like a point or two. It's $20 I already gave up on. It's $200 more I would have made.
Right.
But that's just a trading error. But nothing like a trading error costing you $200. But at least it wasn't a loss. It was just profit not made. But,
which is important. That's a big difference. It really is.
But I mean, from beginning to end, we're talking, basically 5 minutes.
Yeah.
And still made a few $100. Would have made about, 500, but still made a few hundred.
Yeah.
But made a good call. You can see right now it's pulling back up. I got out of the contract down there at 45.96.5. So, and we're at what right now? We're at 45.96.8. 8.5. Yep. We're sort of floating right around that area.
8, 9, yeah.
So, it's just floating right here. I mean, hey, it may keep going down, but that was my target. It went down. And
it really has sputtered. I mean, in that 5 minutes, it made the move, like we say, 70 or 80%
that was
of
the easy money. It was falling between those two zones that we were looking at. And I whenever I give a price, like if I'm looking at, okay, I'm going to get out at 45, 90 or whatever. I mean, I add a couple points, subtract a couple points from that. So I have you sort of see on my chart how I have these blue lines up around the deviations.
Yes.
So I give myself a little bit of leeway. I'm not trying to get to the tick.
Right.
I think that's just a very costly mistake that I've made in the past.
Of course.
And so I've learned to give myself a little bit of a zone versus just an exact level.
And it is, it's because it's not an exact level. There's too many things in play, as in looking at the context.
If come down and hit it, it'll just that last point or two is not going to be worth the stress.
Right. All right, Darrell Martin, Tommy O'Brien. We'll come right back. Come on back. Flat Market on a Friday.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN.com TFNN, and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, Tommy O'Brien, Darrell Martin. So, have you been trading anything besides these Nadex spreads? NASDAQ spreads. Have you traded gold at all? That's what I was just looking at.
Oh yeah, I love gold. So gold has really tight bid offers as well over on Nadex.
They do, for sure. And with the types of moves they've been having this week, today it's pretty calm.
Even natural gas has actually had some really good moves this week. So they've been slow, but they've been big, like day after day.
And so when you're trading those, you're doing similar to what we just talked about, looking at deviation levels and looking at those different profit targets, or?
Exactly. Yeah.
Okay.
So I go in, look, I'll have some zones I usually want to see broken, and when especially when they all sort of pile up on top of each other, I love that. So, like today, we had, for our zone right now, it's still just hovering right at that level. But we're really talking about yesterday's low. We're talking about a one deviation move. Like literally, the one deviation is 45.89. Okay. We're also talking about the low of a volume profile. All three of those low levels all came together at one place.
Okay.
That's going to create a lot of what like your dad talks about a lot, ice, right?
Yeah.
And so it's going to be really hard for it to break through that ice, but it's going to be attracted to it. There's going to be, algorithms are going to move for one deviation moves.
Okay.
Any kind of quant trader is going to be using one deviation moves. Volume profile. A lot of people use volume profile. That's going to, cause. That's basically where. It's a deviation of volume of the concentration of volume from the previous day. Okay. And then you have basically just a support zone, which is based on, basically yesterday's low in this case. So there's a lot of orders down there where people were buying, and there's a lot of.
No, it just makes common sense.
Buyers
it does.
and sellers and everything right at that point. So you put all those pieces together and you get a lot of orders. So that's going to attract the market to that level, but it's also going to be a level that is going to be a lot harder to break through because the market wants to go to where orders are. So it goes to where those orders are located. And that's why it exists. Markets exist to fill orders.
Right.
That's why people come together.
Supply meets demand
to buy and sell, right?
Right.
So the market goes down to where the orders are. When it hits that heavy order zone where all those different pieces are all coming together at one time, then it'll go to it rather fast, like we just saw, like in 4 or 5 minutes. We didn't wait 5 hours. And I was even sitting there thinking, I'm like, I wonder if I should use the 2-hour spreads,
Yeah.
Because I thought it was going to move pretty fast.
Yes, definitely. We don't talk about those a lot, I know, but I trade them sometimes for sure because you're not planning on being in it all day. You're paying for the premium to be in it all day, basically. So if you're not going to be in it all day, then you can. Right.
The only disadvantage to the 2-hour spreads is they're narrower.
Yes.
And so you get your major movement in like that middle 70% of the spread.
Yeah.
So let's say it's a $100 wide spread between $30 below the ceiling to $30 above the floor. That's where it's going to move pretty fast. Everywhere else is going to move really slow. You're going to get like a delta because when you're at the floor ceiling, you're at like a delta of 50.
Okay.
So if you think of it sort of like a call or a put in that sense, that you got 2 points where you have a delta of 50, and then it goes to like 100 delta in the center.
Yeah.
Okay. Then the closer you get to the floor ceiling, then the lower your delta gets, so it moves a little slower. So that's the one thing I like about the dailies. They're wider.
Right.
So they move faster. So that's I usually just default to those unless I feel like I have a lot of time to really analyze it.
I do too, because then it's just trading point for point without that trail off like you're talking about.
Yeah, people are talking about it being complicated. I'll go in, I'm like, it's really simple. You go and choose the end-of-day spread that's near the center with close proximity, and premium is either in your favor or it's, maybe 5 ticks away.
It's close enough, right? And if you're just trading in short, you're just going to be able to get out with the same premium.
Exactly. I mean, I saw some big premium spreads when we were looking at this to begin with this morning. And I mean, I saw some that are like 80 ticks premium and stuff like that.
Wow.
I mean, there's some big premium spreads. There's 50 ticks right now on the 4,600 to 4,630. I mean, that's a lot of premium. So let me show you this real quick. I mean, there's a ton of premium.
I'm pulling it up as we talk
but it's not going to move fast. So that's time decay. That's time value.
Which spread did you just say had the 5 points in premium?
The 5 points in premium is going to be actually on our. It's a 415, the 4,600 to 4,630. So we have that one, and we also have the 4,600 to 4,640. So there's this is actually a good lesson. Right here.
No, I like this when you compare basically similar spreads except 30 points versus 40 points. Yeah.
Exactly. Anytime I'm collecting premium, if the premium is about equal, which we're a couple, like literally 2 ticks, $2 off, I'm always going to go with the one with less risk.
Okay.
There's no financial advantage to choosing that one that requires me another $100 to make money on. So it's tying up more capital, so my ROI is going to be lower.
Yep.
If there was some weird flash, I guess rise in this case, not crash, but you know what I'm saying?
Yes.
Some big flash move, at least I have $100 less risk per contract.
Right. No,
okay.
Less risk is always a good thing. You'd be hard pressed to talk me out of that. Seriously, it is.
So, I mean, it'd have to, I wouldn't hold on to the thing for, 24 points, but maybe 5 points or 6 points, whatever, against me if I was actually going to do that trade. But if I look at this, and this is the benefit of using something like the scanner, is you see, hey, okay, that premium's the same, but one of them requires $100 more. Well, if I'm going premium collection, I'm always going to go, if I can get same profit but less risk, choose the less risk one every time.
Right.
So, but I mean that's not bad. It's it's like 4 points up, and you're selling it 5 points higher. I mean, we're selling at 46.05. The market's at 46.90. It's almost like 9 points above where the market is right now. So it's not a bad trade if you want to go for premium collection. If you think it's going to stay below 46.05, which would basically be a little bit below the 0.5 deviation level, which I mean there is quite a bit it has to break through to get back up there.
Right.
Then that would be a way to do the trade. And you can even look and see if there's anything on the buy side. There is no premium collection on the buy side right now. So there's nothing over there. They're really, that's just
They would just be selling it to collect it, right?
Yeah. And that's mainly because of where it's at. People are like, well, are the market makers trying to screw people, or mess people up?
Yeah, no, it's just understanding how that premium applies. And I think this is the perfect side where you need to, play with that demo account and get used to, as the spreads are towards the high side, the low side, how that premium shifts. And that way you understand basically what you're getting into and understanding your strategy and making sure you're employing your strategy correctly, right?
Well, notice over here, like on the premium side, I was talking about the floor and the ceiling and the delta getting lower, right?
Yes.
The delta getting lower basically means the premium is either getting higher or, more expensive, depending on what side you're on. Notice on our sell sides, all of our profits are less than our risk. So risk is greater than profits on the sell side.
Yes.
Meaning we're closer to all the floors. Okay?
Right.
Notice on the buy side, all of our profits are much greater than any risk that we'd put up. Okay?
Yeah.
That's because we're closer to the floor.
Right.
We're further from the ceiling. So therefore, there's premium that you're having to pay on the buy side because you're close to the floor. You're closer to that 50 delta. Okay? Anytime you're at the money on an option strike, your premium is going to be higher. So that's why you're actually able to collect premium on the sell side or pay it on the buy side. In this case, a way to look at it as the seller's taking on more risk, so they got to put up more premium. Or they actually get to make premium because they're taking on more risk.
Right. And that's why
buyers taking on less risk, so they have to pay some premium because they have a much better risk-reward ratio.
And I like to use that same thing with saying, somebody else is going to be taking the other side of that trade, and they're giving you that opportunity to still have that option in play. And that's where you understand, well, there's still, not tremendous value, but there's still value in that option because there's so much time left. And so no matter how far it goes, it's never gonna, and that's just like you say, the delta. It's just gonna stay in that, whether it's a point or two or where it is.
Exactly.
Yeah.
And looking back over sort of a little quarterbacking of the trade that we did, it went on down. It actually did hit the low of 45.90.75.
Nice.
So we got within like what 2-3 ticks of the exact level we were identifying.
And you got out within like 2 ticks within of that. Yeah.
Exactly. So like about a point or so of that, and I just saw it basically oscillating. It hit right on that zone. It was just starting to oscillate a lot.
And that's where I think if you start to, because I'm looking at it, and it's doing the same thing with saying, would I initiate this trade? And you had gotten a lot of your move. You wouldn't have initiated that trade right there looking for 2 points, and then so it's
Exactly.
For people struggling to keep up with all the math that we go through and the risk reward and the ROIs, it's just applying that simple principle of, what is my
risk?
risk?
I sell right now?
Right. What is my risk? And that's what you're putting up. And what is your potential reward? And that's constantly changing as that trade either is profiting or is losing money. And you just you want to be examining that at all times.
Exactly. So if I see it getting like right within like a point or two of my profit goal, like on the chart, and because I don't make my profit goals based on P&L, I always make them based on the chart because you make a lot better decisions that way. And so it comes down here, it touches this, it starts oscillating, and then what you're saying, which I think is a great way to look at it, is go, okay, at this point, I'm trying to decide, do I hold on for 2 more points, or do I get out of the trade? Okay, because what I don't want to do is give all my profit back.
Right.
But I also don't want to be so like scared that I grab profits too early.
Right. And
so I look at this and I'm like, I'm 80% or more than 80% rolling in my profit goal, which usually is when I like to take profit, and price level profit goal. And then the next thing is what you're saying is, hey, if I look at this, would I get in right now for those next 2 points? And if I wouldn't, and I have any reason to be like cautious, it's time to hop out.
Right, and it just puts you in that mindset of at least being able to say, okay, there's no way I would enter this new, so I need to be definitely alert enough to exit this trade. Basically, that's how I try to
And I
in
would
my own mind.
Quite a bit. I mean, now I'd be down another $140 of my $300 profit. If
and
I
it's that quick, and it's popping, right? It's moving.
Yeah.
I mean, it's going to be gone. Yeah, and then it goes right back up, and that's the other thing. Like you talk about, you make that trade again because it was 5 minutes.
Exactly, and I mean, we're talking through it, so I'm not trading as actively as normal, but I mean, you could be looking for that bounce right off that level. You take another trade, and you can take it with a pretty tight stop, with just a few points right there, and go long and go right back up and make another 3, 4, 5 points. You do that in 10 minutes or so, make another $300-$400, So, I mean, you can, if you'll get in here and you'll not be greedy, and you'll trade to levels and hop out.
And that's, I agree so much, and that mentality of it, and that's, the demo account gets you used to these things, but still, as you come in, with real money, things do change. So you really want to ease into this because those mental powers at play as you're a point away from your target and the market turns against you, handling those and making sure you have a plan for them is important, and it's not easy. It's not.
And I mean, you can even use the other side of the contract if you wanted to. If you wanted to buy, I mean, you could literally trade the same. A lot of times on these spreads, you could trade the same contract. You may not be positive premium on the way back up, but the premium, you don't make it just because you get in.
Right.
You don't
not when you're trading as quickly as you are.
Right. Now, if I hold on to it for hours, I'll make it or I'll pay it, okay? Because the time decay has to go through. But, I mean, if I want to go long on this contract, I mean, okay, it's, 7, ticks away, NASDAQ ticks away. But it's not like I'm going to lose that $16 in premium because I hop in the trade. The premium, like, the air doesn't go out of the balloon just because
it's just that market. All that matters is that it's a tight market. Right.
Yeah. So, my daughter gets balloons all the time, and the air stays in them until hours pass.
It does. It does.
So, you got to let that time pass. Then the balloon will deflate. So you either make money on the deflation or you lose it on the deflation. But again, it takes time. So don't let premiums.
And that time is only for the privilege to hold that option for the entire day. So if you're paying it, then you're not reaping the rewards because who knows what the index or the option's doing. But you're paying it for a reason because you have that time, and so maybe it's something that's taking a little bit longer to make that move. I just think the constantly evaluating it, like you're talking about, or evaluating it, especially as it's swinging close to your profit targets or close to where you want to take those stops, and just staying with that plan.
But so now we were talking about gold.
Yes.
So that's a last topic we were on there. I'll close that one out. Check out what we got. Let's see, is gold moving today? I haven't even looked at gold.
Not that much. It's really just been between like 1078 to 1082. So not that much. I mean, if you look at the week, it's like now. Do they have weekly? They have weeklies on the.
They don't have weekly spreads. They got weekly binaries.
Weekly binaries, yeah, that's it.
I know they've talked about weekly spreads. I mean, really, you can get them on the CME.
I was talking about binaries there. I didn't say it. I know all we talk about is, I was saying to my dad recently, I think it was last week, maybe we were doing the show, that for the binaries, what I do like sometimes is doing the weekly binaries. They're just basically an option. But the binaries have a little bit wider bid offer, so you're paying the premium there. So it's tough to trade them anywhere near as actively as you can trade the spreads. So in
but they move twice as fast.
I
mean, like, sometimes they can move 10 times as fast.
Especially if they're close and they're oscillating around the
bid
point.
offer's not as bad because of the speed. So the speed helps overcome a lot of that.
Okay, that's a good way to look at things. It is. So I like those weeklies, and I look at the moves that you got in gold. I mean, you're talking about some big opportunities, I'm sure, were in play in the binaries on a move like that on a weekly basis.
So let me see. And don't forget, if you're looking at the weeklies, you also have the dailies expire, like on today. You also have the dailies expiring at the same time.
Yes, no, for sure. Now, I'm talking about that I would try and enter
like
maybe
Monday or Tuesday or whatever.
Exactly.
But let's see here.
Okay, yeah. I must have been jumping around.
There we go. Okay, so I got them all lined up. We got a ton of them on there. But there are a ton of contracts for daily, weekly.
That's pretty much on most of what I pull up, and I've done them on the NASDAQ. I mean, they have so many different strike prices that you can really just kind of target your play. And, I'll look for a big risk reward in terms of a nice 5-to-1 or something on a weekly basis. And I'm looking for a big move, and that way I have 4 days instead of, 1 day. And I'm making a probability play on a low probability event, but that I'm getting the proper risk reward, right?
Nice. Yeah, exactly. So I'm looking at now what do we got for tonight? Do we have anything? We had that big move down last night. Moved down a deviation last night from settlement.
Yes.
And I mean that was at night. So
right. No, it's been. I know.
That's one thing I've been talking to a lot of traders about too on the spreads. They're like, well, they don't have the short-term spreads at night. But if you're trading the daily spread, it doesn't matter.
I think it's really just understanding it, because I've never thought that for a second what they said, because instantly you just trade in the big spread. So it's really just understanding that you're not at risk as long as you're just trading in and out.
Exactly.
Yeah. All right, come on back, folks. Darrell Martin, Tommy O'Brien. We'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Tommy O'Brien, Darrell Martin. It's the Bull Bear Binary Option Hour. It's Friday. Might as well check on what the market's doing. I've been so engrossed on the NASDAQ 100. Yeah, we're still, well, the Dow's down 60. Okay. That was pretty much flat when we started.
Yeah. And we got gold. Let's look at it. I mean, it was a massive flash crash last night.
Let's take a peek
So
at
I'm
it.
looking at it right here. I measure speed of movement
Okay.
on my trading. So these, like, you can probably barely see them, but all these little yellow lines you see right here, that means the bars took less than a second to form. And
Okay.
so all this right here, I mean, it sort of looks like a whole bunch of movement, right? Like all this happening.
Okay.
And this started at 22:06, and all that is in 1 minute.
Wow.
Right there. All, like, every single bar here happened in less than a minute combined. So, like, this looks like this perfect little trading range, right? That you'd be trading for hours on end. And no, that's 1 minute of trading on gold last night. And then it just completely chilled out. It started to pull back up. And I'm looking at it. All I can see is that bonds had like a major drop down to 2.95%, 30-year bonds.
Okay.
And so that's the only thing I think that sort of, clawed it down there like that. And then it popped back
There's
up.
a lot of volatility in gold just with its moves. I mean, any day I think you can come in and it can be 20 or 30 points. When it starts reaching levels that are 5-year, lows.
You're talking 10 points oscillations this morning.
Yeah. No, I know.
So.
And I say it's pretty flat, but it seems pretty flat for the week you're having, right? It's
flat is always a relative term. I guess. I mean,
it is.
I remember flat meaning like a couple points on the day.
I
flat
know.
right now is like only 10 points, really.
I know. But really, when you're playing with levels where there can be huge moves, whether it's a pop back up or whether it's just an acceleration right past, when you're at levels that are that far low, I mean, that's where you get desperation, you get fear, you get people taking profits on the shorts maybe, you get people really just being like, I want out, I'm not going to ride this down any further. So that's where those big moves are possible, man.
But let's see here. Trying to see anything else you can see in play. I think we had a great hour. We went in, we hopped out.
We did. The only thing I was looking at during the break is just that that Nasdaq's coming right back up to that 4,600, and maybe it's just going to sit there and oscillate between 4,600. Now, would you look to get back in if it creeps above it, maybe starts pulling back down? Are you waiting for the acceleration back down when you're trading those deviations?
I would not expect the next move back down to be as fast.
Yes.
So basically, it broke the level. That's when I expect the faster move to take place.
Sure.
If it came back down, I'd be walking into that trade knowing that I expect it to just take its sweet time.
Okay. No, that's good.
Because we came right off of a 1 deviation. So, probably not going to end at that 1 deviation. We're probably going to bounce off of it.
Yes.
I would actually, at this point now, I'd be surprised to not see it pop on back up into the same. I mean, you can sort of see the order flow, like all the orders were happening right here around, it probably hop on up to 4606 at this point.
Yep, the bottom range of where that's been, yeah.
Yeah. And it's going to oscillate right around there. And, if somebody decides to come with a little volume, they're either going to push it up, probably to the high of that range. I don't think we're going to get all the way back up to settlement today, but up to like 46.17 or back down to one deviation. But I think we're going to hit that before we choose either direction.
I would look
and
at
then
the
you have to
same
see some
thing.
volume to see it go anywhere.
I trade so visually, I do, and you can just see that where there's a great little line, maybe it's just 46.17, and maybe it's just oscillating back and forth, and I try and look for those ranges, and it's just that simple sometimes.
There's a lot of money in oscillation, or a lot of times the chop. Yeah. There's a lot of money in those that oscillation chop or whatever. If you can just learn to identify it, and the biggest trick is keep your risk low. So if it does move out of it, don't try to be right about the chop. Just get out.
Yeah. No, and it's keeping in mind how fast.
If it comes back in, you can play it again. But like
it's
the
tough
worst
sometimes. Like you just took that trade and made money in 5 minutes earlier.
Right.
So often people won't want to get out in 5 minutes because they'll say, I can just wait. I can just wait. Well, you don't have to wait, and just getting over that mentality.
Right. We would have gave it all back if we'd have been waiting right now.
Darrell, thanks so much. Have a great weekend. Enjoy the rodeo tonight and tomorrow. Hope your daughter does fantastic.
Thank you.
All right. Have a great weekend. Thanks so much for joining us. We got Basil Chapman coming up. We got Nico. We got Steve Rhodes, Dave White. Have a great Friday. Have a great weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.